Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're just discussing the FOMC reaction in the markets. A pretty poor one. Markets all selling off. It was a broad market sell-off. Every indice closing red on the session. The IWM down 2.44%. The SPY down 1.63%. And then the Nasdaq also getting clobbered down 1.9%. Now, the importance of this sell-off and closing at the dead lows is very, very important moving forward in the markets. And not only is the markets closing down very important, but look at this sell-side candle in Microsoft. Microsoft is the world's largest company and making a new all-time high today off of earnings reactions and then getting absolutely sold into is very, very imperative and important to understand. This sell-off in Microsoft, not only is it providing an opportunity for people to make money, but it is certainly a market signal that we have to pay attention to, specifically how Microsoft closes on the weekly chart. So clearly a big bearish engulfing candle, engulfing not one, not two, not three, not four, not five, not six, but almost 7 days of price action in one fell swoop, closing down 2.69%. So definitely a healthy pullback. I think Microsoft needed this pullback, and we'll just have to see if this pullback continues to yield more downside. Now, what was important as well is if you don't understand the interest rate market and the bond market, yields today across the board, the 10-year down sharply. Let me just re-enter that in. The US 10-year yield down absolutely sharply on the session. The US 2-year yield closing down sharply on the session. So when you understand that yields closing negative on the sessions and you still had a broad market equity sell-off, that's something you have to digest and really dive deep into. Why is the market selling off when interest rates are falling? Isn't the cost of capital supposed to be getting cheaper when interest rates fall? So isn't that going to help companies move higher and higher and higher? Well, again, the market is always forward looking, and you have to understand why yields were selling today when bonds were actually catching a bid. So I think there's a lot of important moving dynamics. Obviously, Apple has earnings tomorrow. Apple has sold off into earnings. So definitely watch this upsloping trend line on Apple. This is the pivot from your low pivot in 2023 to this pivot to this pivot. Apple has lessened the expectations. You can clearly see the market dynamic has not really taken kind to the Vision Pro as of yet, but it really comes down to Apple's earnings tomorrow. It isn't the largest company in the world. It has lost its reign to Microsoft, but perhaps they can pull a rabbit out of the hat and give this market a little bit of an upside boost in the near term. It's going to be a long shot, but the fact that they have had 6 consecutive sell side days going into earnings leads it to the fact that it lessens the expectations of having shitty earnings. Now, Google, also an important metric. When was the last time you saw Google gap down this hard and almost closing at the dead lows of the session? It's been quite a while. Google closing at these levels is a very important market signal as well, pretty much engulfing, again, almost over a week of price action in one fell swoop on earnings. So pay close attention to some of these market leaders because they could be telling us something for the coming months in terms of trading and investing. And I certainly think that there's a lot of opportunity that's going to present itself over the next couple weeks. And even as of today, I mean, if you turned into my Trading Capital live stream, you would have absolutely netted and banked with us on the live stream. I run a Discord and trading service at tradingcapital.ca where you track all my, you get access to all my entries, exits, my alerts, live trading alerts. I track insider buying and selling, and I also do valuable members daily analysis videos that I think are extremely helpful to position you on the right side of the market. Again, my members were positioned right accordingly due to this sell-off. You can clearly see on the weekly chart, you were just hitting some massive technical resistance. This trend line goes all the way back to your pre-COVID high pivot, breakout, retest, rejection, and now you're getting rejected off of that level in a very extended state. But again, markets, when they pull back from the all-time highs, you typically get very big bounces as liquidity is waiting on the sidelines to try to chase this market higher. But just be cautious, because if Apple starts missing earnings again, that's going to really hinder this market from going higher in the short term. So again, Apple earnings on watch tomorrow after the bell. And in terms of the FOMC, what Powell said today was not really that good. He put a lot of bearish sentiment into the market. He completely removed the rate cut expectations that the market was pricing in. And I think asset classes will have to adjust based off of where the yield market goes. Please give this video a like down below if you found it useful, and stay tuned for more analysis.